All right, guys. Well, I do want to remind everyone that we are doing those live streams daily now, and I provide a ton of content. So if you didn't watch today's, go ahead and check it out after this webinar. I'll try to recap it all. So we finally ended our losing streak on the SPY. It's been I don't know, maybe 3 trading periods of losses, and today we walked away with a 33-cent gain. I think probably by the time you guys got the trade, it might have been up a little higher. And yeah, so it's about 30 cents higher right now. I'll pull up the current trade alert. So just note that the trade went up in our favor after I alerted it, but it's still a great trade. And the P&L difference, even when it's going in or against our favor, isn't going to change dramatically. So just to put it into context, when I put the trade alert out, we were at 288.41. Now we're at 288.70, and you can see my potential profit was $3, and yours, if you got it a little late, is only 10 cents less. So not a big deal. And again, that's why don't worry about what the credit or debit is compared to mine. Just focus on the strikes here, and big picture. Let me zoom out. Here's the big things that I believe are really controlling what's happening right now. So number one, I like to keep a close eye on, oh, let's see, we got William in. Hey, William, how's it going? Oh, okay, we're all muted. No worries. So number one, I like to keep an eye on the German yield on the 10-year as a leading indicator for what's going to happen stateside. A lot of really interesting analysis was saying that look for the probability of the Fed fund to drop 50 basis points as a buying opportunity. We hadn't got there as of yesterday, and then today we saw that TLT shoot up to the upside, and magically we now have over 50% probability of getting to 50 basis point cut or larger, not by the September meeting, but by the October meeting. So right now it's looking like the Fed will just drop 25 basis points September 18th and probably another 25 basis points in October. The slower they can do this and get away with it, the better in terms of trying to deal with trade war tensions. And so the big picture from my point of view is that we have money flooding into negative yielding bonds, which is absolutely crazy. You essentially have to pay the German government for the right to lend them money. So why would people do that? Well, it's not average Joes that are doing that. It's these big banks that are doing it. And so it's really an insurance play to back up their equities positions. The idea is if equities were to crash, that would create an even bigger flood into these bond products, push the yields even lower. Now, who's going to buy their bond back for them? Because certainly they don't want to sit there for 10 years and lose money. That's not why they're buying these. Their expectation is that the government will have to step in, support their credit market, their bond market, and buy that. So big money flowing into these bonds, negative yielding rates makes absolutely no sense, except that they're expecting it as an insurance play. So what happens when people do start to cash out of these bonds? Where are they going to invest? I think they're going to invest in U.S. equities. And that's why we are positioned right now to aggressively ride the wave higher. Today's trade alert, we can make up to $3 a share on the SPY or $300 a contract. That's $900 a week. Obviously, we don't expect to make that type of return very often. It's only after these sharp sell-offs have we had very profitable periods in the SPY program. So my anticipation is that the SPY will travel up to 300 or higher in the next several weeks and months. I think on the FOMC meeting, we will potentially disappoint the bond market a little bit, but make the stock market happy. So I'm expecting our TLT trades to be a little more bearish than they had been, and our SPY trades to be considerably more bullish. Now, I had been bullish on the SPY before the unexpected Trump tweets raised the tensions, but I do think for now that we're going to have a period of calm. It doesn't mean we don't want to have a put option below because it's very hard to predict when one of these two countries is going to escalate things. If we go to our total strategy, oh yeah, I do want to review a few options for how to allocate your capital. So I really have three setups that may make the most sense to you depending on your schedule. If you want to take advantage of all of our trade alerts 5 days a week, this is what a lot of people are doing and does have the best overall return to date. We would have 100 shares, this is per 100,000 of capital. We'd have 100 shares in the SPY trading Monday, Wednesday, Friday. That would cost $30,000 approximately. Tuesday, I like Facebook. My intentions are to play Facebook until the SPY is back towards 300. Then I'm going to rotate into what I believe is the safest single security we can buy in the Tuesday play, being Microsoft. So it's the #1 position in the SPY, #1 position at Stanley Druckenmiller. It's just the #1 position in most high-profile funds. So when we do get the next Trump tweet or the next escalation out of China, I think it'll be when the markets have rallied, they get confident again that they can afford to cause some stress on one another. And so I'm going to be looking out for another escalation after the SPY gets back towards that 300 level. So expect for us to trade Facebook until we get towards 300 on the SPY. Then we'll rotate into Microsoft until we get somewhat above 300, assuming I'm correct. And then I'll most likely rotate back into silver, expecting another round of trade tension escalations. In terms of how we're going to play the SPY, as long as what I'm expecting continues to develop, we'll be long the SPY and be a little bit critical of how much higher the TLT can go currently. So I might flip our collar to profit if it goes flat or down, and to potentially have a small loss if the TLT goes higher. So it's going to set us up to do very well in both portfolios if I do have this, this macro view correct. Now, on the other hand, if trade wars escalate sooner than later, if the SPY were to crash, TLT would most likely continue to rally. We'll be losing on both parts of the portfolio. So I'll keep a close eye on that. In terms of our buy and hold portfolio, we got rid of GLD, which is spot price gold, which is good to really take advantage of immediate scares. But GDX is the mining ETF. We want to own GDX if we believe there is a long-term demand for gold. And so if there is a long-term demand for gold and the price is gradually rising, GDX can go up much faster than GLD. Now, we do have some small cryptocurrency positions, but if you don't want to mess around with crypto, this would be your breakdown. So I'll look at our crypto portfolio in a little bit. It's a very small piece of the puzzle. Now, some people don't want to do the Tuesday trade. They'd rather have all their equity position in the safer SPY. If so, all you really need to know is the right ratio to balance your portfolio is going to be 100 shares of the SPY and then 200 shares of TLT. The overall message here is to have an equal weight in the equities as the bonds. And we've actually had some people recently who wanted to just do the Tuesday trade and not have to put in all the work of trading 3 days a week. So if you wanted to do that, it would make sense to have 100 shares of the Facebook play and then 100 shares of TLT and still, once again, buy and hold GDX. I think we have some new people, and let me welcome in. Joe, welcome in. Dean's in. Hey, Dean.
Hey, Jason, good morning. How are you doing?
Good. And we also have Kenneth Russell. Welcome. I've unmuted you if you guys want to say hi. You also have the chat box. Exciting day in the markets, huh, Dean?
Yeah. Finally getting a bid here.
Yeah. Finally put an end to our losing streak on the old SPY.
Yep. Yeah, it was nice. 34 was what I realized. So 34 cents per contract.
Nice.
Yep. Can't complain. 17% a year annualized.
Yep. So, okay, guys, let me jump back into this. So here's how we have our portfolio organized currently. Now, do realize on the slide where I said 100 shares of the SPY and 100 shares of Facebook, that would be more aggressive than what I have up here on the screen. You can see I actually have 3 times the capital in the SPY as I do the Tuesday trade. Now, the Tuesday trade has been the most profitable of the income trades, but the bond market trades are really catching up. So I would suspect that the bonds are a bit overbought right now. Now, I've been thinking that all year, and we continue to rack up the profits in that part of the portfolio, but it really has gotten to quite an extreme. So I think we're at a period where the Fed funds rate needs to catch up a little bit and confirm that they're going to follow along with the bond market. So with that said, we are set up to really let these equities positions run up in the foreseeable future. Here's our total return. If you overlay all the strategies, we've only had one losing month in July, and no blowout months where we're making a huge amount of money, but March we had a pretty strong 2.7. June we had a strong 3.2. Other than that, it's been bouncing between 1 to 2%, which is our goal. If we look at the SPY, it has had a period of weakness here, as you can see, and July was really because I was expecting this trade war to escalate in July. I thought Trump was going to run out of time if he wants to fight China on the trade war front, on a lot of different fronts, that he would have to do it sooner than later. And I was a month early, so we were trying to bet down in July, ended up losing about 1%. By August, I thought, all right, he's just going to push us to 2020. And then surprise, surprise, right when we were ready to get really bullish, he came out and raised those tariffs, raised the escalation, all the rhetoric. And so, we haven't lost much, only 0.1% in August. And I think now that we have managed to make it through that escalation, that we will have a period of calm. Seems like Trump gets confident to raise the rhetoric every time the SPY gets above 300. So that hopefully will be a trend we can count on.
Hey, Jason, will you scroll up to the total portfolio really quick for the month of August? I actually haven't looked at that today, and I wanted to see if it was down for the month or not. Okay, cool.
No,
Yeah.
1.7, yeah. So I'll show you guys where the Tuesday trade, and I do want to point out, we actually, I was starting to think this was getting out of control at 144. Now we're at 148. So I actually already accounted for having to be assigned on this. So we're not overstating the return on that Thursday trade. I'll go show that real quick. So this will be what we input tomorrow, because almost all of you should be assigned on this tomorrow. So we sold that 145.50. So that capped out our profits, and we missed out on $3, which is a bummer, but this portfolio continues to perform. And what it has that's really nice, if you guys did take that trade, and I haven't closed this out, I just wanted to see where it was trading at, is this gold. And it's still trading right around there. So we were long the gold. The idea was, all right, let's take a safe credit out of TLT, selling that call option, buy put option for downside protection, and then to take part of that profit and leverage it with a call option on gold. This is Barrick Gold. So that is up 250% today. And again, it's not a huge position, but that's how we were able to take the idea that if bonds go up, gold goes up, let's not take as much risk and leverage it with the call options. So if we had not been so defensive and kind of greedy for short-term credits from the call option, let's just see what we would have, if, this would be at right now. So we would have had an extra potentially 3%, 2% profit today. So that's okay. And that's been actually the case all year on this TLT, is that every time you see a negative return, that's when we missed out on profits. That's where the underlying asset generated profits. And the short call limited our profits. So we've been missing out on profits all year and still continue to grow this portfolio.
I'd rather miss them than shed them.
Yeah, exactly. So yeah, guys, that's really kind of what I'm expecting to happen. Of course, things change. I will definitely. This is a really interesting interview. I'd recommend you guys listen to. It's in the live stream today in the doc link. This is a billionaire who escaped China. They've been trying to hunt him down, and he has all kinds of crazy things to say about the Chinese. Number one is that their only concern is to maintain control of the country through the Communist Party. Two, anyone who becomes successful really has two paths. Either one, they sign over the company to the Communist Party, or two, they end up disappearing, going to jail, or executed. So he has a prediction that Jack Ma of Alibaba, who just recently had to sign over a lot of equity, is most likely going to, if he doesn't give up his e-commerce business willingly to the Communist Party, he will disappear. The other thing is he's saying that it's a system where money flows into China, but money cannot flow out. And so the super rich Chinese have been using the Bank of China to essentially launder money out of China and try to get it into goods that have longevity, like real estate in Vancouver, New York, all over the world. They're buying up, the Chinese really like property. So his prediction is that the Chinese economy is a lot of fake numbers, that they're really hurting, and that they're going to lose control over their currency as they run out of dollars. So keeping a close eye on this chart is probably our best indication to when things are going to really crack. Let me pull that up. And in fact, we've actually been able to, Dean and I, be watching at night for moves on this bad boy right here, the yuan against the dollar. Typically what we're seeing is this will devalue, then the next morning we see a whole bunch of drawdown in the equities markets. So as they run out of dollars, nobody wants to sell the Chinese goods in their own currency. Got a message from Oscar. I don't think the rates will go to zero, as the talking heads are harping. He thinks that the 2016 bottom will get tagged. Yeah, we'll see, Oscar. We'll see how low they want to go. People got to realize the central bank is really at the whims of people like Goldman Sachs, JP Morgan, and those guys are very influenced by the Chinese banks because they've invested so much money with them. So definitely these two economies are super tied together. And if the Fed were politically motivated to get rid of Trump, who's ruining the bankers' relationship with Chinese, they may just very well not lower rates, which questionable because they have the most to lose. So it's definitely something we have to follow carefully. The best thing is to watch this currency conversion rate. The higher this goes, the more worried I will become about the trade war escalating, about China really cracking, and then them starting to make desperate moves. So in terms of what to expect in our program, again, the Monday, Tuesday trade will be relatively bullish in the options and the strategy on equities until the SPY gets to 300. I do think without some sort of escalation, we will go beyond 300 considerably. And that's simply due to money being free all over the world right now with nowhere to go for yield. So I'm expecting a potential massive rally in equities to close out the year. The Thursday play, I've been wanting to bet flat or down on for quite some time and have not. We've missed out on a lot of the profits, but it continues to go higher and higher. I think at this point, at least until we see equities travel considerably higher, I will place that as the strategy for Thursday. So most likely we'll design the option trades to profit if the TLT kind of stutters out for a little bit. I don't think we're at the end of the rally in the TLT because I don't think the Chinese want to make a deal. I don't think they can. What we're asking them to do is change their political structure, their legal structure, and that's their advantage. Their big advantage right now is they think that the U.S. is weak, fat, lazy, and too nice, and that they have no idea of how rough the real world is, that they can take advantage of us and come out ahead. So I think they actually want to try to create a recession globally to crash the U.S. stock market and then try to come out of the depression ahead. So that does seem like what the Chinese are trying to do. We'll see if they can really last that long or if there'll be a revolution within China and take down this communist leadership that the people really don't like. So got to carefully watch the currency conversion rate for the best clue as to how weak China is becoming with all these escalations. So that's my outlook. Now, some key things I'm watching for is, number one, if the Chinese were to buy farming agricultural goods in a meaningful way, I do think Trump would be happy to take that as a win going into the election and then de-escalate all this. If that were the case, I might look at some call options on the emerging markets ETF. I'd probably be very bearish in our bond portfolio, might completely get out of the precious metals. But I think the chances of that happening are relatively small right now. I don't think China has had anywhere near enough pain to give up. They have a big holiday celebrating their leader coming up. So chances of them giving in on anything right now, I would suspect, are highly improbable. And I do think they want to see if they can just crash the U.S. economy and get Trump out of office. So we'll see. On the other hand, if we were to see America expedite the pressure on Huawei, I think the Chinese would immediately retaliate. And I do think the U.S. could put Huawei out of business. This would be a huge problem for China, as that's one of their key companies in the tech space. And it currently relies on a lot of products out of the U.S., from the Google Android operating system to a lot of the chips, the high-tech chips that they don't know how to create yet. So those are really the three key things we're looking at. One, is the currency going to devalue rapidly? If so, I would be bearish on our stocks, bullish on our bonds and crypto and metals. If U.S. were to not extend these trade sanctions against Huawei, same outlook. We would expect China to retaliate. We want to be long the bonds, long the metals, short the equities. Things just kind of remain right where they are right now. I'm expecting the bond market to probably stay right in this area, gold probably to float around in this area, and stocks to catch up. And if the Chinese were to give in and buy U.S. agricultural products. I think that's the only thing they would give into. But if they did, I would suspect that Trump would give them something back in kind. And then again, we'd probably look for a pullback in bonds, precious metals, and then push these equities really higher, and maybe look at some call options on emerging markets. So got to pay close attention. Most likely, I think that not much is going to happen for the next several weeks, and everything will probably just float higher in the equity space. And I think these bonds will just kind of bounce around right now. So that's the overall look. I'm not sure if everyone out here gets all of our trade alerts, but this is certainly a period of time where you don't want to just be in one asset class. You really want to make sure you have a bond equity 50-50 ratio and some gold in your portfolio. So if you are watching this recording live or the replay and you're not in our full program, definitely consider giving Dean a call so you can get our 5 trade alerts a week. And he's available at 505-322-7515. All right, guys, let's see what kind of questions we got out there.
They set it up with MasterCard, Visa card, so that it's working for them outside of Iraq.
Any questions from any of our members today? Who all is doing the bond plays in the crowd so far? Or have you only been doing the SPY? Oscar's been doing all of them. That's good to hear. Yeah, that's so yeah, so you think we're getting towards the top on the TLT? Dean, yeah, I've been having to slowly convince Dean to the bond plays. He's been an equity bull for the last, well, it's made him a lot of money, but.
Yeah, I was extremely thankful last Friday. I came in on Thursday, and I couldn't have been happier on Friday.
Nice. Yeah, wild time to be alive. I think people will be even more surprised when the SPY breaks back to 300 and maybe even higher. So now I do want to warn people, a lot of people that I've worked with over the last decade in finance, they have this really bad habit of they won't just listen to the instructions. They won't allocate their capital in a smart way. And what they end up doing is they look at what made the most money in the last very small period of time, and they want to jump all in on that trade. And so, you know, the way a market goes, one goes up, the other goes down, the other goes up, the other goes down. And they end up chasing the hot trade only to lose, and then they chase the new hot trade only to lose instead of just following the full plan. Oscar's asking, well, yeah, certainly. So, well, Oscar says, will you short the bond market when you see rates get to zero or to the bottom? That's a good question. Let me pull up the chart here. Okay, so we have a few easy to play products in the corporate credit that should give us quite a leading indicator to trouble head for equities. Now they may crash. The equities market's so smart. It reacts so quickly to news. So I'm watching HYG. This is the high yield corporate bond ETF. This will probably most likely be the first to really have serious trouble before the US bond market would. Now the TLT, I realize, is extremely sensitive in terms of price fluctuations relative to that long duration. That's why people like the TLT. It allows you to get some pretty aggressive exposure to the long end of the Treasury yield. And so that's not to say that this can't sell off and the other products won't, but I think this is not my prediction. This is Jeffrey Gundlach's prediction. Look at that insane, just insane chart on LQD. This is the investment grade corporate bond. Most of the debt held in this basket of corporate debt is companies like GE, AT&T. Just a handful of them have this ridiculous amount of debt. And that chunk of it, about half of the holdings in this basket, are probably somewhat toxic and bad debt. And so the prediction is that if they were to re-rate some of this debt, like simply just GE, which could be going on from this accounting scandal that may or may not be true, if that were to be re-rated from the triple Bs and then get thrown into that high yield basket, this thing could really have a significant sell-off. So if I were to see LQD start to have trouble, I would then become concerned about the equity market. And only after the equity market has had a serious sell-off would I really become too paranoid over the TLT. I think that the government is going to come in and fix the price on the yield on these bonds. So I'm going to be very precautious to get overly bearish on the bonds until a full-blown crisis has already been underway and then somewhat resolved to the point where they actually want to raise rates. So my expectation is that they will control the rates because they, if they let the rates rise on the TLT, everyone is going to freak out. They're going to be showing a big loss in their bonds. And they're not buying the bonds because they want to make 1.5 for 30 years or 20 years. They're doing it because they want to sell it to the government when it goes up a little bit more, because they know the government can't let that yield rise and cause a huge panic. Now all of a sudden the US government can't fund itself and the whole banking system freezes over. So yeah, it's going to be tough trying to short the TLT. I think first we'll see the equity market crash, but I think we're quite a ways off from that. So really what I see is a situation where everyone is going to print a ton of money, support their bond market, and create the biggest bubble we've seen. And so I suspect that things are going to get a little outrageous here in terms of valuations, and most likely we're going to see the SPY, the TLT, and GDX all rise together in fluctuation until we get some massive inflation, and then they're forced to raise rates and pull all this bad investment out of the market. So that's what I'm expecting right now. Now, of course, there's a lot of things that can spoil that early. Namely, it would be US-China escalating faster than they are. For now, though, what all this trade war stuff is doing is it's really causing a lot of pain in emerging markets, ruining any opportunity of investment out there and pushing all the capital flows to the US. So it's kind of bizarre to think that, oh, the rest of the world is evaporating any sort of potential strong investment. The growth story is collapsing. And that's why we want to buy up US products instead of it being this healthy situation around the world. So this is the ETF that everybody's been predicting will outperform the SPY. But I think the people predicting that, unfortunately, accepted a lot of cash from the Bank of China. So perhaps that's why. But yeah, if we could potentially really create a truce, a real truce, then I'd suspect the government would be willing to let those yields rise a little bit, not support their bond market as much, and we could see something like emerging market ETF really take off. That would be the upside. The downside is you get another 2008 style crash in emerging markets. It'll most likely take US equities with it. But for now, while it's just kind of slowly unfolding, that 2018, 2017 story is kind of replaying. So you can see in 2017, while emerging markets crashed, 2018 SPY had quite a rally until we had the market get upset at the Fed raising rates, which was this tremendous sell-off here. But now the Fed's not raising rates, they're dropping rates. And so this trend should just continue without some sort of catastrophe between the US-China relationship. Any other questions out there, guys? Let's see if we have any new members that popped in. No, it looks like the same crowd. Yeah, just definitely make sure you're doing the bonds and the stocks. Right now, I am expecting pretty good rally in the stocks, but we'll be set up so that the TLT can provide some cushion for us. Most likely, Thursday's trade will be something that if the TLT just floats where it is or goes a little bit lower, will generate the profit. And that tends to be the correlation relative to the stocks going up. So. All right, guys. Well, thank you so much for your time. We got the TLT play coming out tomorrow. I'll double check the outlook and make sure we're really ready to try to stop riding the bullish side of the TLT for a few weeks. Thanks for your comment, Oscar. Thanks, Jerry. Oh, William's got a question. Go ahead, William.
What is your, I know it's a guess or guesstimate, where is gold and Bitcoin going to be in 6 months?
I think GDX will go to you said in 6 months?
Yeah, or maybe over the next 6 months.
Yeah. Yeah, I think they're both going to double. I think these two products will double. Let me pull that up. Now, but the catch is that if the trade war de-escalates, then these things crash. So that's why we don't tell people to go put too much money into it. So I think within 6 to 12 months, we'll see a 50 to 100% rise in GDX. And in terms of Bitcoin and Ethereum, I think the gold market cap is $6 trillion. And really the suppressor of gold prices are these central banks. So they can easily suppress the value of gold by buying it up. And they have been buying it up because they know they all see this problem and have seen it for the last 5 years. Market cap of Bitcoin used to be, I guess the whole space is only 265. The market cap on Bitcoin is 183 billion. So central bank could, or bankers could put a limit on the price on Bitcoin just by buying it up and selling it. But to manipulate Bitcoin is a lot less capital. So I think our potential for Bitcoin is to double pretty quickly here in the next big devaluation of the Chinese currency. So I would look at that as your signal. But yeah, I'm definitely thinking that Bitcoin's going considerably higher. And we recently rotated out of being just pretty much all in on Bitcoin. And now we have a 1-to-1 ratio recommendation on Ethereum. So kind of like gold and silver in terms of relationships. And Ethereum, to get back, if you look at the volume pouring into Ethereum. People are just aggressively investing in Ethereum right now. So I like having a 1-to-1 ratio of Bitcoin to Ethereum right now. Now, again, in our total portfolio, we have 1.25% in Bitcoin and 1.25% in Ethereum, 7.5 in GDX. And so that's kind of the ratio I'm doing in these super risky assets. People got to realize gold, Bitcoin, and Ethereum are aggressively manipulated in both directions. So if we can hang on to the swings to the downside to catch the big moves up when the pressure really mounts towards big flow into those assets, that's how that can really pay off for us.
Thank you.
Yep. But I really wouldn't have more than 10%. 7.5 in GDX. Now I like GDX because I think the trade war is going to be a long-term problem and not just this short term. So if we thought there's just going to be a quick panic, we might ride GLD up towards, you know, maybe 180, maybe a little bit higher, depending on when the central banks decide it's time to put a cap on the price. But if we think, and that's the market cap, that's 6 trillion. The market cap in these gold mining companies is tiny, tiny. So not much capital can really flow into these equities before they become ridiculously valued. So potential for GDX, if the trade war does continue, and if the central banks keep lowering rates and they start buying up their own debt, which seems, quite frankly, the only solution they have, then we have a long ways to go on GDX.
Okay,
Now,
thank
if
you.
you don't want to do crypto, something that's somewhat similar, let me find it. Oh yeah, it's SIL, sorry. I like SIL. If you don't want to do the crypto, you might say, all right, I'm going to put 7.5% of my precious metal portfolio in GDX, the mining companies for GDX, and then I'll put 2.5% in this silver miner ETF. So it's the same idea. Most likely they'll be highly correlated. And so if you do want a little extra juice, that's how I would go about doing it. All right, guys, any last questions? Well, thank you guys very much for your time, and we will have our next webinar next week. Thursday trailer coming out tomorrow. We'll see if we really have the balls to try to call a top in the TLT. I think it just seems outrageous. So most likely, even though I don't think this is the end of the bond bull market, I think it's ready for some profit taking here. So we'll have that trade out tomorrow. Just close out looking at the SPY. Hanging in there. We're up about 30 cents on that trade right now. So looking good. All right. Thanks, guys.
Thanks, Jason.